Hey there, welcome to the Reinsurance Podcast, the place where we dive into all things reinsurance, the coolest part of insurance. We're your hosts, Jared and Ben, a couple of ex-practitioners who loved the industry so much we founded Supercede to tackle some of its biggest headaches. And we're here to share our insights and stories with expert guests as we uncover what's really going on in the industry.
Welcome back, everybody, to the Reinsurance Podcast here in Monaco. I'm delighted to welcome another guest. We're here with Joe Ziolkowski, who is the CEO of Relm, a very exciting company. So,
Thank
Joe,
you.
I just want to hear all about it. Should we dive
first of all,
straight
thanks
in?
Yeah, thanks so much for having me here. It's great to be here.
No, likewise, glad to have you on our super yacht, in theory.
Just don't show the rest of the boat.
No, exactly. But you're here in Monaco, you're
Yes.
here telling people all about what Relm does, presumably, and also procuring reinsurance for the wonderful things you do, presumably.
What a radical concept.
Indeed. But tell us a little bit about Relm, how you came to start Relm, and so on.
Yeah, so the short of it is, I spent a lot of time operating in different aspects of the insurance industry. I spent a lot of time on the alternative side, setting up captive insurance and reinsurance facilities. And, if you do that for nearly a decade, you get a really solid understanding of what the insurance industry does particularly well, and those risks and exposures and solutions that fall pretty far outside the relatively square box of traditional global insurance and reinsurance. And solving a lot of those problems with alternative insurance and reinsurance infrastructure gives you a lot of perspective on what to do when markets are dislocated or when risks arise that aren't well accommodated. And when I saw what was happening with digital assets back in 2017, admittedly my interest at the time was purely speculative. I bought Bitcoin in 2017, but I had a reason to dive into the technology, right? And the infrastructure that was being built in this industry that was otherwise kind of shrouded in a lot of headline risk, right? The use of Bitcoin to buy nefarious things on the Silk Road and frauds and rug pulls and a lot of these unfortunate headline grabbing moments that really comprise such a tiny fraction of this evolving digital asset economy, right? And the underlying technology of what was happening in the blockchain space, is distributed ledger technology, right? Which is designed to bring transparency, accessibility, disintermediation. These are all good things. And there were companies, credible companies, that were building products and services on top of this technology. But because it was so new and it was really seeking to transform the way a lot of our traditional industries transact, it was not at all well accommodated by the traditional insurance marketplace, right? And if you zoomed out and you saw the scaling momentum of these credible initiatives, these companies were going to need to raise capital. They were going to need to get regulated. They're going to need to enter into contracts with other companies. And while all of these are kind of fundamental steps in these companies scaling their business model, the other common denominator is they all require insurance, right? And if these companies can't find access to informed and dedicated capacity, it can stymie, a lot of the potential that these industries have to offer. And so our strategy really was to build a purpose-built insurance carrier that was laser focused on bringing informed capacity to companies operating in these emerging sectors as a way to not just help them scale and build credibility within this emerging sector of finance, but to also build a great insurance business. And that's what we've spent the last 5 years doing.
Amazing story. And it's in great contrast to, I guess, the wider industry response, where I think a lot of us had an existential crisis. We all thought we were going to be ourselves as the industry replaced by the blockchain, and so spent a long time trying to rebuild ourselves in blockchain, rather than thinking actually there's a lot of customers out there who are doing genuinely useful things with the distributed ledger technology who will need insurance themselves. But I understand also that's not where you've stopped, right? You've continued since then into more than just digital asset insurance.
Yeah, and so one of the key moments in the establishment of Relm was really working with the Bermuda Monetary Authority to obtain a license, right? And for anybody that has launched an insurance company, one of the most critical decisions you can make is your home jurisdiction, right? Dealing with regulators that are sophisticated, risk aware, but also have the credibility and latitude to deal with kind of esoteric or niche exposures is not an easy thing to come by. And so we spent the better part of a year in 2019 working closely with the Bermuda Monetary Authority to get them comfortable with the idea of giving us a license to insure companies the rest of the market largely wanted nothing to do with. And to your point, that wasn't just companies operating in and around the digital asset space, right? We also focused our capacity on companies operating in the cannabis and alternative therapeutic sectors, right? Companies using, not just cannabis, but things like MDMA and ketamine and DMT and ayahuasca, all these things that a decade ago
would have been
you wouldn't have ever mentioned on a podcast like this. And today form the basis for some really important neurologic treatments dealing with things like PTSD and eating disorders and substance abuse. And so the way that we look at those industries, while they're wildly different, they face the same kind of fundamental problem when it comes to insurance. And that is a lack of awareness, a lack of appetite, and really our objective in kind of executing on our vision, which is making innovation resilient, is to identify these sectors that are going to be fundamental game changers, build product and underwriting strategy and distribution, and continue to go deeper and broader into these sectors with solutions ahead of the market.
Brilliant, and I love that making innovation resilient line. That makes so much sense, hearing you contextualize it like that.
Yeah, thank you.
And I guess part of that making it resilient involves coming to this conference and being a reinsurance buyer effectively. Have you found that journey?
I mean, it's been pretty remarkable, right? Because to your point, in order for us to continue making innovation resilient, we ourselves have to be resilient, which at some point requires some risk transfer. And I think another unique aspect to Relm's existence almost 5 years in is that if you commit to putting your balance sheet on the line for these risks that the rest of the market doesn't have an appetite for, you have to also come to a pretty quick realization that the reinsurance market also isn't going to have an appetite for them, which means for nearly the first 3.5, almost 4 years of our existence, we retained 100% of the risk that we wrote. And we were writing insurance for companies operating in more than 40 countries around the world at every subsector of the different ecosystems that we were supporting. And so while we didn't have risk transfer in the reinsurance sense, really one of the strategies that we sought to develop over the first several years was building diversification within these concentrated sectors, looking at early stage companies and later stage companies, looking at companies operating as custodians or asset managers or payment and remittance platforms or exchanges. And in doing so, managing our risk selection intensely, focusing on judicious deployment of our limits, managing retentions and pricing. And we had the idea that if we could execute on those 4 or 5 things really well, and we could demonstrate the need in the market for our capacity, that over a period of likely 3 years with audited financial statements and independently valued loss reserves, we would eventually present well enough on paper to obtain some reinsurance in the traditional sense. Unfortunately, we executed on that last year in a big way, which was big.
Congratulations! It makes a massive difference, I'm sure, to your go forward plans. And
it brings a whole new context to attending a conference like this, right? As a bona fide reinsurance buyer, so much of the value in coming here is understanding how the market views cedents, right? How they view the next 12 months and how Relm, as a prospective buyer of additional reinsurance, can bring an element of value to the overall portfolio that a lot of these fantastic reinsurers are building.
Absolutely, and you talked a little bit about the diversification you're able to build within some of the lines you focus on. I guess also because they're quite separate innovations, each of those are quite different. Cannabis is not going to be especially aligned to digital assets, one would think. But then likewise, when you come to a marketplace like this and you're offering something totally different from prop cat and casualty and so on, that must actually be, once you've had a few years of proving that this works, it's going to become quite attractive, I would have thought, as a diversifying play for reinsurers.
Yeah, I mean, I like to think so. And certainly we've received a lot of interest from prospective reinsurance partners on the ability to gain access to 5 years of underwriting insight, 5 years of data that really presents probably the most comprehensive cross-section of risk-related data for companies operating in these sectors globally. But reinsurance capacity moves slow, right? And so the idea of getting acquainted with prospective reinsurance partners and really trying to present with total transparency on how we've built this portfolio, how it's performed, how we're building in elements of diversification and protection of our own balance sheet through, I think some innovative but also pretty logical measures on the risk management side of our business is, I think, an incremental step in getting more traditional capacity to back our book.
Yeah, completely. And in that journey, I guess, to sort of making innovation resilient and dealing with sectors that, by virtue of being innovative, are quite volatile, how have you managed product design and how have you managed generally, I guess, knowing that digital assets has had natural volatility to be expected, and similarly cannabis regulatory, ups and downs and so on. How do you deal with that as a company?
Yeah, it's a great question. I mean, the first thing is that in order for us to underwrite profitably, it requires deep engagement with these prospective insurers. And I think one of the beautiful parts about the last 5 years is the number of management teams that we've been able to engage with to understand how they're running their business, right? How they're generating revenue, how they're scaling their business over the next 12 months, how they're raising capital, engaging with investors who have made material investments in these companies, speaking to independent directors who are putting their own credible reputations on the line to sit on the board and chart a strategic course for these companies doing really innovative things. And ultimately, I think with that perspective, you can find out how to use, in some ways, traditional insurance products like directors and officers liability to solve immediate pain points for these companies. And if you can demonstrate alignment and a genuine interest to help these companies solve problems, all of a sudden your insureds become your best source of insight on how you need to evolve your products. And our, what I consider to be market leading products, it wasn't like someone flipped a switch and we cast them into the market. It was a function of underwriting thousands of accounts over the last 5 years and really engaging not just on an underwriting initiative but on claims paying initiatives, going through losses with our insureds in really tumultuous times, especially during kind of the crypto winter that kicked off in May of 2022. And really, I think all of those steps in the process have really put us in a position to understand the way these companies are operating in a way that enables us to put aligned products into the market.
Yeah, amazing. And speaking of that product evolution process, I was lucky to have a quick chance to scroll through some of your latest products. How's it going with the new innovation spaces? Could you talk a little bit about some of the other products that you're exploring and launching at the moment? I saw space assets and things on there, Web3, all sorts. How's that going?
Yeah, I mean, I say this all the time, but I truly believe it. We've done the least interesting things we're going to do in the last 5 years, right, going forward. And certainly these 5 years have been stimulating, they've been energizing, they've been fantastic. But I think we now are able to approach the market with a level of credibility that enables us to broaden the aperture and look at these other innovative sectors that are going to continue to fundamentally change the way that we live or trade or transact. And when you look at what's happening in the space economy, there is some unbelievably innovative and I think really challenging initiatives that people are undertaking. There's a lot of capital flowing into the space. There's regulatory frameworks that are being developed around the world. And whenever you have capital, and whenever you have regulation, and whenever you have companies kind of pushing the envelope, there's going to be a need for insurance. And so we're going headfirst into what we call new space and working with some really credible partners in the industry to help guide us on a very selective but committed underwriting journey.
Amazing. And so you come to Monte Carlo, you get to talk about all these amazing, exciting things with people. Is the reinsurance industry stepping up to the task and giving you the support you need so far?
I mean, we've got some great reinsurance partners currently, and I think we also have a realistic expectation about what it means for reinsurers to step up to the plate. We know that we're going to continue evolving our business model in a way that hopefully presents in a sophisticated, risk-adjusted and risk-managed business model, and confident that as we continue to do that and engage with prospective partners, we're going to get some additional support that's going to help us continue to scale.
Makes complete sense. And I guess in some ways you're both interacting with and finding new sort of macro themes that maybe the wider market hasn't spotted. But a lot of what you're doing, AI, for example, is a massive topic here.
Right.
You're looking at that space more specifically.
We're insuring that space.
Yeah, and similarly, I presume at some point bits of climate change and so on will impact some of the covers you offer, even if that's, in a very particular set of clients that you've figured out that nobody else has. So yeah, I'm excited to see what you come out with next, beneath the radar of all these mega trends that they talk about here.
That makes two of us. But I think that is one of the most important takeaways. I think, listening to the first session that kicked off this morning, talking about, the direction of the legacy business over the next 12 months, you really get a sense for where these capital providers are, they have an appetite.
Yeah.
Regionally, across products, and to me, some of the most important insight is what they're not talking about, where that capital is not going to, which presents additional points of dislocation, potential opportunity, potential chaos, but certainly informative.
There's proper risk-taking in a very, very clever and thoughtful way, and I'm delighted to have had you on the podcast to round off our day podcasting here. Thank you, Joe.
Thanks so much for having me.
True pleasure,
Great speaking with you.
Best of luck with the next renewals.
Awesome, thank you. Appreciate it.
Perfect.
Thanks for tuning in to the Reinsurance podcast. If you enjoyed our show, don't forget to subscribe wherever you get your podcasts and leave us a review to let us know how we're doing, preferably 5 stars. For more insights and updates, follow us on LinkedIn and visit our website at supercede.com/podcasts. You'll find the links in the show notes.